Alok Agarwal, Quant and Fund Manager, Alchemy Capital, who joins us on the show. Hi, Alok. Good afternoon. Good to see you again. What are you making of current market setup? And do you think this long-awaited GST rationalization is the trigger that is required actually to help some recovery on the ground? Because everyone's talking about President Trump, but domestic economy itself is soft. Your take?
Yeah, hi Nigel, good afternoon. This latest development of rationalization of GST taxes is quite a welcome one. We had been seeing in the last several months that the government in itself was trying to first ease things on the regulatory side during the budget as well. They made introductions on the personal income tax benefits as well. We also saw the monetary policy easing from the RBI at a record-breaking pace. What was now left after we saw especially a couple of months of slowdown in GST collections was something that was a little more widespread, something that has a little more bigger multiplier on the overall economy. And this GST rate rationalization, once it comes through, would be quite a welcome move in order to stimulate the whole economy, stimulate the consumption part, which has been the objective of the government in the last several months that they have stated out. So that will be a welcome one.
Let's talk about IT. Do you think IT stocks are attractive buys at this juncture, even if they don't give you too much by way of growth, considering the entry point, the dividend yield, the cash flow yield, the valuations? Would it make sense to buy now for a 15-20% kind of a pop?
The thing is that, there could be multiple camps on this view, but we tend to believe that, the IT sector in itself actually lacks that kind of growth. So there are various narratives. One of the narratives was that it is because of the rising rates that those stocks are down. But our worries have been more to do with the growth numbers than the margin numbers. So those numbers need to get better off for us to get a little more positive on IT. Valuation wise also, they're trading at the sector is trading somewhere around 21 times on 1 year forward, maybe 18, 19 times on 2 year forward. But with the earnings growth rate projected at somewhere around 10% only, maybe something positive goes by, maybe another 1% can get added. That's quite below the overall corporate earnings growth and the overall nominal GDP growth as well. Nevertheless, they are great quality companies. So once things start looking better for them on the growth front, that's when we'll get positive. Right now, the view is not very positive on the sector.
Okay, all right. Alok, what do you think, though, about President Trump? That 27th is almost here and no breakthrough. We get to go into the weekend hoping that, there'll be some kind of easing. Do you think the market has now digested that this tariff is an issue? Or do you think it's not yet in the price? And post the 27th, we'll again get a little bit nervousness that's creeping in? Because the Indian markets have underperformed. Make no mistake about it. Last 1 year, we have underperformed. Last 6 months, we have underperformed as well. But, earnings are likely to come back.
Pointed out, last 1 year, Indian markets have underperformed the world index by about 20%, which is one of the lowest in recent years. Compared to the emerging markets, we have underperformed 20% in last 1 year, which is possibly lowest in 15 years. So a lot of this development on this 50% tax is to a large extent there in prices. But one of the ways to look at it is that negative development to a large extent is there in the prices. The response of the Indian government in terms of GST rate rationalization would to a large extent offset that. Then what's left is that the negative is already there in the price and the offset measure is already there from the government. In case we have any kind of reduction of those rates coming from the US side, that could be a big positive. Over the last couple of days, even the Vice President of US made statements like wherein that was kind of used as an indirect measure to put pressure on Russia to stop the war. You never know that we have seen these kind of U-turns earlier from the US side as well. So if I see that these rates do not come through, so we'll have that negative from US side gone away, but the response on the Indian government side to stimulate the economy to stay. Suddenly, that whole issue of higher rates may convert into an opportunity where the economy has stimulated and those rates have reduced.
Which are the high growth sectors that you like right now, where valuations are still palatable? I mean, how would you structure your portfolio right now, Alok?
The interesting part is valuations aren't really very great or encouraging at most places. One has to contend with higher growth rates and higher growth visibility. We find those things coming at a good pace in companies like electronic manufacturing, the capital marketplace, the consumer discretionary. A lot of platform-oriented companies catering to both the finance side as well as the consumption side. Cement sector is actually bouncing back nicely. Some of the other sectors like hospitals and hospitality, aviation, real estate. These are the segments that are seeing very good growth, well in higher double digits. And some of them may have higher valuations, but the runway of growth in some of these sectors is decently high.
Okay, hotels. What about hospitals? I think you like hospitals too.
Perfect. Yeah,
Any
we like
particular
hospitals as well.
Yeah, any particular stocks? What's the thesis from here on? Because stocks have done well. So how much more value is left?
More than the value, the best part of the hospital segment is, first of all, we started having multiple national chains or multi-state chains now, instead of being a very, very regional-oriented hospitals. Secondly, if you look at the private side of consumption on the hospital side, the number of beds available in India is far below the overall WHO requirements as well. And the sector in itself is likely to have a benefit of a big operational leverage as well. So that operating leverage, because of the total number of beds increasing by about 40-50% over the next 2 to 3 years, that's likely to play down on the overall earnings front. So the macro demand remains. There's a net more demand out there than the supply. And the supply is coming up over the next 2-3 years. You have a few credible players out there who have demonstrated better execution. So that's why the sector looks quite promising in terms of delivering that growth.
Okay, all right. Well, Alok, it's always good to hear your thoughts. Thanks a lot for joining in. We look forward to having a chat with you. I guess by the next time we chat, we'll have some clarity with regard to Trump's tariffs.
Sure.